Welcome back to the deep dive. Today we're diving into the really fast-moving world of finance. Think boardroom strategy, global economic shifts.
And we're drawing from the Wall Street Journal,
Mm.
specifically the edition from Tuesday, July 15th, 2025.
Right. Our mission, as always, is to pull out the key insights, the surprising facts, so you get the critical developments without needing to wade through everything yourself.
Okay, so first off, there's this interesting split picture in the markets. You've got financial stocks doing well, pushing the S&P up a bit, 0.1%, the Dow 0.2%.
NASDAQ hit a new record too, right? Up 0.3%?
Exactly. But, and this is the kicker, the U.S. dollar just had its worst first half in, well, over 50 years.
Wow, worst in 50 years.
Yeah, down 13% against the euro, about 6% against the yen. Significant.
So how does that work? Stocks are up, records are being set, but the dollar's tanking. What does that mean for, someone managing a portfolio?
Well, straight away, a weaker dollar makes foreign stocks more attractive for U.S. investors.
Hmm.
Your returns look better when you convert back.
Ah, okay. The currency conversion gives you a boost.
Right. And it also helps multinational companies based in the U.S. Their overseas earnings are worth more in dollars. So it's kind of pushing investors to look globally.
Diversify beyond the U.S. Makes sense. And speaking of where money is moving, it's not just public markets, is it? Private capital seems really active.
Oh, absolutely. Take J.P. Morgan Chase. They're making this huge, like, $50 billion bet on private credit.
Private credit, so lending directly to companies, often riskier ones, outside the usual banking channels.
Precisely. It's a market that's really boomed, taking business from traditional banks. J.P. Morgan seems to be trying to reclaim some of that market share.
Interesting move. And what about private equity? They're making waves too, especially around retirement funds.
They are very intensely lobbying the Trump administration, actually. They want more access to the huge $12 trillion U.S. 401k market.
12 trillion. That's enormous potential.
It is. And there have been legal signals, like an Intel court case win, that might pave the way. Stone Point Capital just closed a big fund, $11.5 billion.
So we could see more private equity in typical retirement plans soon. That feels like a big shift.
It really could be. Now, shifting gears slightly, but still on Capital Frontier's crypto, Grayscale Investments wants to go public.
The Bitcoin fund pioneer, joining the queue of crypto firms listing shares.
Yeah, exactly. Bitcoin's hitting new highs, and you have the administration talking about making the U.S. the crypto capital. It's all converging.
So crypto moving further into the mainstream. Okay, we've got shifting capital. What about industry shifts and policy? AI is everywhere, of course.
Definitely a major driver. Elon Musk is asking Tesla shareholders to vote on investing in his other venture, XAI. That needs billions.
Billions for artificial general intelligence. Ambitious.
Very. And at the same time, look at Pittsburgh. It's moving from its steel roots to become a hub for AI and data centers.
That's quite a transformation. Steel town to tech town.
It really shows how economies can pivot. It's fascinating.
It is. Now, policy. Tariffs are back in the headlines, causing ripples.
Big ripples. U.S. copper prices. They've surged because of President Trump's tariff talk. That's sparking a race to find new domestic copper sources.
And internationally, retaliation.
Looks like it. The EU is prepping a list targeting about $84 billion in U.S. goods, industrial, agricultural.
84 billion. Okay.
And even things like orange juice futures are up 25% since that 50% tariff on Brazilian imports was announced. So, real immediate effects.
So with all this trade uncertainty, where's the smart private equity money going? You mentioned Bain Capital, Kohlberg.
Right. They're leading a multi-billion-dollar investment in PCI Pharma Services.
What do they do?
They help biotech and pharma companies bring new drugs to market. It's a sector maybe less directly hit by, tariffs on goods, more resilient perhaps.
A bet on healthcare innovation, avoiding some trade risks. Got it.
And one last industry shift, retail. Department stores have struggled for years. Any signs of life?
Well, there's Printemps New York. They're trying something different. Not just a store, but a luxury Parisian residence concept. Like an experience. Dining, art, shopping, all mixed together.
Exactly. Trying to create an immersive environment, totally contrasting with the decline we've seen for decades. Basically saying the old model is broken, experience is key.
A bold move. We'll see if it works. Okay, let's crystallize some takeaways for you. First, that dollar decline winners and losers, obviously. How should sophisticated investors strategically think about this for their portfolios?
Well, beyond just buy foreign stocks, it's getting more nuanced. You need to look at how the weak dollar interacts with local inflation in specific countries.
Ah, okay. Not just the currency game.
Right. and maybe even consider hedging strategies. Is the gain real performance or just the currency effect? It's about finding that true alpha.
Makes sense. Second, tariffs and policy uncertainty. How are businesses and PE firms navigating this? Is it just risk management, or are there actual opportunities?
Both. Companies are definitely using services to calculate the real cost of delivery under tariffs, stress testing supply chains. But private equity is also actively looking for businesses that are sort of tariff-proof.
Or even ones that benefit?
Or even benefit, exactly. It's like a search for resilience, finding assets that can thrive even when things are volatile.
Interesting. Finding stability in the storm. Finally, that Pittsburgh example, steel to AI. What wider lesson does that hold for economic development and investment?
I think it signals this broader economic shift. Strategic investment in high-tech infrastructure like data centers, AI research, it can literally revitalize a whole region.
It's not just swapping one industry for another.
No, it's about building a fundamentally new economic engine, changing the region's identity, creating different kinds of jobs. It's maybe a blueprint for how other areas could transform.
A powerful reminder that economies aren't static, constant motion shaped by finance, strategy, policy. Staying plugged into these connections is really key.
Absolutely. It helps you see the opportunities coming down the line.
Well, that's our deep dive for today. Thanks for joining us.